Hello there, Currency Mavericks. This is Rob Reinhold. It is October 11th, and let's jump into the Currency Recap. In this session, we're going to go over what happened today. We're going to take a look at all the returns in the equity markets and also all the returns in the currencies and commodities. Then we're going to see, do we have a new technical score? And we're going to score all of our currencies from strongest to weakest. And then, as always, we're looking for trade setups where we pair up those strong versus the weak.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Let's take a look at where we were 24 hours ago. So 24 hours ago, this was our velocity board. We had the Kiwi and the Aussie showing moderate amounts of upward velocity, and we had most of the cryptos showing weakness, and also dollar and yen showing weakness, with pretty much everything in the middle. So that's where we were 24 hours ago. Let's jump into the news of the day. And the big news of the day really is the bond market. The bond market has come down substantially. If you take a look at the US 10-year bond here, you can see that we topped out at 4.9% and we've backed all the way back down to 4.55%. That is a big turnaround, and that's why we've seen the dollar fall. That's why we've seen equities rally, is those bond yields coming down. Now, all of this still happened in spite of the US PPI coming in super hot. The numbers were supposed to be around 0.3, 0.2%. Headline came out at 0.5. Core came out at 0.3. This report was worse than expected. So what we would have seen just 2 to 3 weeks ago, we would have seen dollar spike higher, yield spike higher. We would have seen stock market go down, but we didn't see that. This is where at Maverick, we have a term called sentiment. When good news happens and the price action doesn't follow, or vice versa, bad news happens and the price action doesn't go lower, it's telling you that everything was already priced in. And that's exactly what happened with this PPI report. Tomorrow we have the CPI report. I'm not saying the same thing could happen tomorrow, but it could. It's showing you that the markets were fully pricing in a more aggressive Fed. We got FOMC minutes today at 2 Eastern time, and the minutes were actually fairly concerned about the economy, where it's going. So that really helped us get an end of the day rally today, as the market was starting to sell off a little bit before that. If we take a look at the daily return of currencies, here is the board here, and you can see the Aussie and Kiwi, who we had showing the most velocity, they cooled off a little bit. Now the yen was still the second weakest currency. We have liked the yen short, but take a look at that dollar. That dollar was up 0.1%. The dollar was up today, but considering that hot PPI report, it's showing you that the dollar still isn't wanting to go up here. I'm not saying it wants to go down, but it's saying that it's not ready to take off again. It had a huge run. It needs a little bit of a breather. You can see the European currencies is where the money went today. So European currencies versus dollar and yen, I still think is the best trade out there. The stock market ended up about 0.5%. It opened up about 0.7% higher, and then it fell to negative, and then it recovered by the end of the day. Oil has just been super volatile, down 2.5%. Today, it was up 4% yesterday or the day before. As you can see, you're all over the place. Crypto gold was up, crypto down. What we saw in the crypto world was we saw Litecoin and Bitcoin take a hit today, and you can see Ethereum and Bitcoin Cash were basically sideways. So with all that analysis, the big question is, did anything change? And I want to take a look at this S&P chart, because this S&P chart is very, very important. Because has something changed? And the answer is yes. We were clearly headed lower, lower lows, lower highs. And we talked about the end of the seasonality. And you can see that we've had a big rally. Now, this rally should have failed at this resistance, and also what is the falling 20-day moving average. This is the first sign that this market that has been going down for the last 2 months may be over. Now, it's not a for sure thing yet, but this was the first test, this resistance area and the 20-day moving average, and you can see we're moving up. The next test here is the 50-period moving average. That is the next test. If it breaks out above that, guess what? We are going to go to a +1. So at this point, we were at -3. We're now at -2. I'm going to call it -1.5, but again, it still is -2. But these things are ready to turn. We're still not out of the woods yet. You still not get up and applaud and say, oh yes, a new bull market's starting. That is absolutely not the case. We need a lot of things to happen. We need to go up above the 50-period moving average. We need the 20 and the 50 moving average to cross. Then we can say, okay, that is a green light. So right here, right now, it's simply telling us that we're no longer as bearish as we were just a few days ago. And we are going to be creeping up this scale if these equity markets continue to recover. So again, next step is -1, next step is 0. We'll talk about getting bullish when we get up here, but it's a little too early yet. But it's definitely saying do not be as bearish. So if we end up being a little bit more bullish, then we can really start to look for, again, weaker dollar. We already like weak yen. I think yen is still looking like a good short. And we're going to have to look and see where is the strength in the Forex, because right now, the European currencies clearly look better than the growth currencies. Right, let's take a look at our schedule tomorrow. We do have the UK has GDP tomorrow in the middle of the morning, so 2 a.m. Eastern time. And then all of a sudden you can see we've got US CPI. Now I'm looking to play the pound. I'm already in a pound yen trade, and we'll take a look at that one. I still think it looks good on a setup. But anyone trading pound dollar, you've got to just understand that there's likely to be a lot of volatility over the next 12 to 16 hours as you get through that CPI. I'm avoiding that CPI, but I am willing to play the pound over its GDP report. And then as you can see, we do have Chinese CPI tomorrow night. That is likely going to affect the Aussie and the Kiwi, but that really is about it. So let's take a look at the currencies that are moving. And again, we're trying to find the strongest to pit up against the weakest. Would having more trading capital help you meet your trading goals? Maverick Currencies is the oldest US-based Forex and crypto prop firm. We fund traders just like you with 5- and 6-figure accounts where you keep 70 to 80% of profits. Click the apply link on the top right of this video to start the process. This will take you to a 4-minute video that explains the trader position, and you can read a list of FAQs that answer pretty much all the basic questions you have. After that, if you're interested, fill out an application, and then you'll watch the full-length recruiting video and schedule an interview with our recruiters. Are you our next trader? I want to take a look at the dollar basket first. This is the dollar against all the other 7 major currencies, all equally weighted. And you can see here on a 4-hour chart, we've got our momentum indicators in here, and we can see that we've been clearly moving down. And we've had little bounces in between. We've had little bounces in between where the parabolic star was broke here. Great shorting opportunity. Any little bounce was a great shorting opportunity. We just broke out above the parabolic star again. This thing is just waiting to be shorted, but it's not ready yet. It is in the middle of a bounce. So I do like the dollar on the short side. However, is it the best looking short? And when I come over here to the yen, all of a sudden I say, yeah, I'm not too interested in the dollar anymore. This yen is falling, and it's falling right here, right now. I don't have to wait for anything. We've got this nice line down, parabolic SAR. Everything is looking to make the yen a really good short. So the question is, what do we buy against it? What looks the best? Now, we liked the Aussie and Kiwi just about 24 hours ago. You could see that they reached this little high, and we did pull back over the last 24 hours. Is this a good pullback to buy? We do like buying pullbacks, but you can see with the Aussie is in a range. So yeah, the Aussie might be a decent trade off of a pullback. But again, is this the best long that we can find? And we come over here to the Kiwi, and all of a sudden the Kiwi looks better because it's no longer in a range. We pull back to this support line and we're holding it. It's not bouncing yet. As you can see here, it's not bouncing yet. I like it on the chart. I like the pullback. It's not ready yet. So I don't really like Aussie. Kiwi looks okay. It's not ready yet. Let's go to the European currencies. We go to the euro. It looks great. Everything is telling us it's on a run. It's looking really good. The question is this the best one? So if I take a look at Swiss franc, is Swiss franc better? Well, the Swiss franc just broke out to new highs. It looks okay, but you can see the last couple candles, there's not a lot of momentum there. What about the pound? You can see the pound looks good. The pound has broken out of a resistance level. So what we love to do at Maverick is whenever we have some currencies we don't know which the best is, we pair them against each other. So euro against Swiss franc. Euro is falling against Swiss franc, which means that Swiss franc is stronger. So we know that we no longer are interested in the euro. So here's a question. Is the pound or the Swiss franc stronger? And you can see they're basically about the same. This moving average is going flat. It's going nowhere. RSI is going nowhere. So look, pound and Swiss franc, they are about the same strength. So I know that I want to be short yen and either Swiss franc or pound on the long side. Now this is where you get to decide as a trader, do you want to trade the Swiss franc or the pound? Now you get to decide because there is major news coming out of the UK at 2 a.m. Eastern time. If you want to avoid that, then the answer is you should trade the Swiss franc. Over the last 20 hours, we've seen the yen get even worse and the dollar get a little bit better. Still negative, but a little bit better. All the cryptos have just looked terrible. We're just uninterested in these whatsoever. We did see the European currencies all strengthen, and the pound and the Swiss franc are stronger than the euro. And you can see the Aussie Kiwi pull back to a zero. So one of two things is going to happen over the next 24 hours. Either the European currencies are going to stay strong, or the Aussie and Kiwi have had that nice pullback and going to make a run. Which one is going to happen? I don't know. But here's what I do know. Looking for a trade right here, right now, you always go with the stuff that's working now. And that is pound and Swiss franc against yen. So let's take a look at yen against both of those. So as I said earlier, if you want to avoid the news coming out of the UK, then your trade is Swiss franc against the yen. And you can see this is just a really nice looking chart. We've had this nice downtrend. We got a reversal, and you can see we are now making higher highs. And the big question is, where do you get in? I like it here. It's one of these trades where we've already broken out. It's got a little momentum. Yes, we could have a pullback, so just make sure that your stop is liberal enough for you to sit through any sort of pullback. But this one's ready to go right here, right now. Let's take a look at pound yen, which is my preferred one on the breakout back here. Same thing. It could have a pullback. It definitely could pull back here, but the entry is here. So at this point, I think you can get in, make sure you have a liberal enough stop to where you can sit through some volatility. But to me, this one just looks like it also, like the Swiss franc versus yen, wants to go higher. So if you want that little bit of volatility from news, this is your play, pound yen. If you don't want to mess with that, then stick with Swiss franc versus yen. For tomorrow's trading, make sure you are aware of the CPI. Any dollar pairs are likely to have a lot of volatility, and they're likely to have that whipsaw. So right at 8:30, you usually get a spike up and a spike down, knocking out everyone's stops, screwing everyone over. We like to avoid that whipsaw. We either like to have a very, very liberal stop that doesn't get hit, or we like to enter after that whipsaw price action. And I'm going to echo this. I know we've been saying this for the last week or two. Expect moderate moves. This is not a great trading environment. It's a good trading environment, but it's not great. It's not like what we had back in the summer where things were running 100, 200 pips. We're getting 40, 50, 60 pip runs. That's literally what there is right now to get. So you can get them, but just don't be thinking that you can stretch these trades out for these big gains. That is not the kind of market we have right now. Thanks for joining me, everyone. Take care. Happy trading.